Most Wisconsin buyers are quietly saving up for a down payment that they don't actually need. If you're planning to buy in 2026 and you haven't heard of the USDA loan, stop what you're doing.
It's the Mortgage 101 podcast where real talk meets home and life.
In this video, I'm breaking down the USDA loan in Wisconsin, which areas near Milwaukee and Waukesha qualify, who's eligible, and what zero down payment actually looks like in real numbers. I'm Manley Haynes, loan officer with Rate, 24 years in the mortgage business, and USDA is still one of the most underused programs I have because nobody tells the buyer it exists. Most people hear USDA loan and they picture farmland, they picture rural, they assume they don't qualify because they're buying in Waukesha County or a suburb right outside of Milwaukee. Here's what might surprise you. Some of the most popular commuter suburbs in Wisconsin are on the eligible map, and I'm going to show you exactly which ones. We're covering three things: what the USDA loan actually is, and how it works, and the eligibility map that applies specifically to Wisconsin buyers in 2026. And then we're going to run the real math, USDA versus FHA versus conventional, so you can see exactly which one saves you more money. And I'm not here to tell you USDA is perfect for everyone, because it's not, but I am going to give you the numbers so you can make that call yourself. The USDA loan is a government-backed mortgage program specifically designed for buyers in a rural suburban area. Here's the thing that most people don't realize. Rural doesn't mean what you think it means. The USDA draws eligibility based on population density, not the distance from the city. And that means large portions of Wisconsin, including suburbs that are perfectly commutable to Milwaukee, qualify. The big headline: zero down payment. That's not 3.5% like FHA. It's not 3% like some conventional programs. It's zero. Instead of mortgage insurance, USDA charges a guarantee fee. 1% upfront can be rolled directly into the loan, so you're not writing a check for it at closing. And 0.35% added annually to your monthly payment. Hold on to that number. It becomes really important when we run the comparison. The income limits for 2026 in Wisconsin are $119,850 if there are 1 to 4 people in the home. If you have 5 to 8 people, the limit changes to $158,250. Most first-time buyers in Wisconsin fall comfortably under that threshold. But here's the income trap I see buyers walking into before they even look at the map. USDA counts all income in the household, not just the borrowers on the loan. If a parent lives with you, their income counts. If a non-borrowing spouse works there, and their income counts too. I've had buyers who looked eligible on paper and get disqualified because they forgot to include the family member's income that pushed them over the limit. Know your full household number before you assume you're in. Now the map. Most Wisconsin buyers picture USDA properties as out-of-the-way places they'd never actually want to live. Here's the reality. Areas like Oconomowoc, West Bend, Hartford, Watertown, Burlington, Port Washington, Grafton, and Whitewater. These are real commutable Wisconsin suburbs. Many of them sit 25 to 40 minutes from Milwaukee. Good schools, growing neighborhoods, a solid housing market, and a large portion of properties in these communities are USDA eligible right now. Knowing those areas qualify, let's talk real math. Because USDA sounds great on paper, but what does it actually cost you compared to FHA? Let's use a $280,000 home. That's a realistic entry-level purchase price in the USDA eligible Wisconsin suburb. FHA loan, 3.5% down. That's $9,800 out of your pocket at closing. FHA also charges an upfront mortgage insurance premium of 1.75%, which is another $4,900, either at closing or rolled into the loan. Then the monthly MIP at 0.55% of the loan, the balance is about $128 a month. And here's where the math really matters the most. The FHA mortgage insurance never goes away. If you put less than 10% down, it's on your statement for the entire life of the loan. You have to retire it to make it go away. Now, USDA loan, $0 down. The 1% upfront guarantee fee is $2,800, and that rolls directly into the loan. Monthly guarantee fee about 0.35%, or about $81 a month. Let's just say it out loud. On the same $280,000 home, USDA saves you $9,800 at the start and then saves you roughly $47 a month compared to the FHA's monthly insurance cost. Over 5 years, that's nearly $12,800 back in your pocket between the upfront savings and the monthly difference. Most buyers are never even shown this comparison. They sit across the table from a lender, they hear you need 3.5% down for FHA, and then they go home and they start saving. Meanwhile, there's a zero down loan sitting right there waiting for them. That $9,800, that's your emergency fund. When that furnace goes out in January, that's your moving costs. That's the breathing room that make the first year of homeownership actually feel good. Here's what nobody talks about. FHA gets all the press as the low down payment program. Every first-time homebuyer in Wisconsin knows the name. Every real estate agent mentions it. But for eligible buyers, the right income, the right zip code, USDA quietly beats FHA on almost every metric. Lower monthly payment, zero down, and no mortgage insurance that follows you for the life of the loan. The only question is whether a specific address or your household income puts you at a zero down zone. That's it. The whole equation. Is USDA right for everyone? No. If you're buying inside Milwaukee city limits or in core Waukesha County neighborhoods, you likely won't be eligible in an area. If your household income clears $120,000, you're out also. And sometimes FHA genuinely makes more sense. It has more flexible credit score guidelines. And for buyers who need a lower credit score to get approved, FHA can open doors USDA won't. One size never fits all in this business. But if your target area is on the map and your income is under the limit, running this comparison first is worth every minute. Speaking of comparing loan options, Anthony and I covered a full breakdown on the Mortgage 101 podcast when FHA actually beats USDA, and there's one scenario we talked about that even experienced loan officers get backwards. It's worth a listen. Check it out wherever you get your podcasts. And if you want me to pull up the USDA eligibility map for your specific address and run your numbers side by side, USDA versus FHA versus conventional, reach out, call, text, or DM, whatever works best for you. I'm happy to do that. I'm Manley Haynes. Thanks for watching.